Oh, sorry, I do not dance on my TikTok, but I actually do post short form finance videos. So if you want to check that out, make sure to follow me through there. But other than that, make sure to subscribe to my YouTube channel if you're new. And let's just get right into it. So number one, what is an index fund? You probably heard this term being thrown around a lot, but you've actually never known what it is. I used to be in the same boat until I actually decided to make the step to educate myself. So essentially what it is, it's a collection of stocks. So imagine if you went into your local grocery store and they only sold a box of rainbow marshmallows. And maybe they only sold a separate box of 4-leaf clover marshmallows and a separate box of 4-leaf clover marshmallows. But that's actually not the case, because instead they're all mixed together and you can actually be able to buy that, whether it is a marshmallow Lucky Charm box or whether it's just a regular cereal box. It's basically just a collection of all these different stocks together. And generally they are the collection of all of the top companies. So like I said, we've got Apple in there, we've got Microsoft, we've got a lot of tech companies. We also got some sports companies in there, Nike, stuff like that. So the price of a full share actually ranges from $3,000 to around $13,000. So I think you and I both can't afford this, not only because we're teens, but no one just has $3,000 in their pocket. So that's why there's actually something called fractional shares, which basically is just a share and then it's a fraction of the share. So let's say that all of the money that Apple is worth or valued at is this amount. Then it gets divided into a bunch of little shares called stocks, and then they get thrown onto the stock market. Then a fractional share is one of these shares, and then they're divided even smaller and smaller. That's basically what it is. So there's a couple of different of these index funds. There's the S&P 500, the Nasdaq's index fund, and the Dow Jones index fund. And there's actually a lot of different movies that I would recommend if you want to learn more about it. There's this one movie I watched in economics. I really hope my economics teacher isn't watching this, because I was just on my phone the whole time, but I forgot what it's called. It was about like the Dow Jones index fund and how it's invented. I would say it's kind of interesting because it kind of just explained how it was like and how it came to be. And I would really recommend the movie The Big Short. I don't mean short like a dwarf, okay? It's another kind. If you want to learn about shorting, short squeeze, that kind of stuff. There are so many benefits as to why it's really good to invest in index funds. Number one is diversifying your portfolio. So if you don't know what a portfolio is, in terms of an investment portfolio, it's basically just a portfolio or basically a collection of all of the investment instruments or assets that you have put money into. So in terms of diversifying, it means just actually investing in more assets to make sure that you spread out your risk. Because for example, in terms of, let's say, all of your assets, if I invest in real estate, stocks, and Bitcoin, out of the three, let's say if the price of Bitcoin just absolutely dips, I still got stocks and also real estate to back me up and keep me afloat just in case my Bitcoin prices plummets. Now, in terms of an actual index fund, let's say that in this S&P 500, we've got Apple, we've got Google, and a whole bunch of other stocks. So let's say that Google, all of a sudden, tomorrow I wake up and then it just tanks. For legality reasons, that's just a hypothetical situation. Then I would still have all these other companies to keep me afloat, and I would still have money in there, and they would still earn me profit or return on investment. And historically, in one of the index funds, the S&P 500, from 2000 to 2019, there's an annualized return of around 8.87%. So that means that if you put money in the S&P 500, it's basically guaranteed that you'll have around a return of 8.87% every single year. So this is why index funds is recommended for people who want to get into the stock market but are just dipping their toes in and they're beginners, because they don't have as much experience, and also if they put money into it, they don't have too much to lose. That's why index funds are really good for if you're going to buy and hold. So it's more so for long-term holding, and it's not just stuff for day trading, because obviously it's kind of tailored to the market. So it's just for a long-term investment and not a short-term investment. So just keep that in mind. Also, if you're big on tax returns, which honestly, if you didn't watch my tax returns video, it's gonna be up here somewhere, so make sure to actually watch it. Then this investment is great for you because it is a long-term kind of thing. Just like I said, good for buying and holding. You actually get to pay less on capital gains tax, because generally if you hold an asset for a longer term, you can pay less % in taxes. But downsides are that you actually won't beat the stock market, because index funds are made to match the stock market, which is the reason why. Additionally, index funds also have less protection, but generally when it comes to index fund, when you buy and hold, you should be okay on the most part, because if you just look at the general trend for any index fund, it's just going upwards. Unless you're day trading index funds or just buying and selling it on a very short term, then you might actually lose money, and that may cause some anxiety, and you may want to actually have that protection. It tracks the markets, so kind of like I said, depending on whether the market is good or bad, the actual index fund will kind of follow the overall trend. Lastly, you won't necessarily invest in a company that you like, because it is a collection of so many different ones. You might have invested in it because there's one company that you really believe in and you think that the price could go up, but maybe there's another company that you don't like so much and you just invest in it anyways. So those would really be the downsides, but they can definitely be combated for sure. So then you might be thinking, Teen Wealth, then how do I actually buy an index fund? Well, let me break it down for you. Step 1, you're gonna wanna pick which index fund to buy into. And you wanna think about if you wanna buy fractional shares or if you wanna buy the actual whole share itself. So how I like to think of this metaphorically is it's kind of like when you're shopping for, let's say, a phone or a gadget. You wanna compare its different features, its price points, and which ones really just are tailored and suit your needs. So you might want to buy a certain index fund because it has a company that you like. So if I like Google, I would want to actually invest in the S&P 500. Then number 2, you're going to go ahead and purchase this, and there's actually different ways about going about this. So you can either go into a brokerage, which basically a broker is someone that sells stocks. So you go to them, but usually for brokers, they will actually charge a little bit more for index funds. So sometimes you can actually go to the index fund company itself directly online and buy it through there. But some apps like Questrade and Fidelity actually offer the option to buy index funds. So it just really depends on if your app or the one that you like using supports that feature. Alright guys, that's pretty much it. If you enjoyed this video, make sure to give it a big thumbs up, because not only does it help me out with the YouTube algorithm, but I'll know you actually like this video. And also, if you have any suggestions on what videos you want, make sure to comment them down below. Make sure to subscribe too, because I post finance videos every single week and it's totally free. And that's pretty much it. I'll see you guys next week. Bye!